the Fed's actions over the next 6 months?
Currently, the market is quite concerned that the Federal Reserve might reduce its monthly asset purchases and may in fact even terminate them in the next 12 months. But I don't think the Fed is about to do that. The market has sufficiently scared them into soft pedaling their intentions to taper or withdraw asset purchases. So I think asset purchases will continue more or less at the current pace. Even if they reduce the asset purchase quantum of $85 billion per month, it may not be necessarily be the beginning of a process. It could just be one-off. It could even be restored back to $85 billion. So all options are open, and I personally believe that the talk of tapering would taper more than the asset purchases themselves being tapered. So the Fed would remain accommodative, and extraordinary monetary policies, by that they mean asset purchases, will remain in vogue in the next 6 months too.
With all the reform initiatives over the last 6 months, has your view on India changed?
Well, my views on India have remained rather steadfastly negative over the last 6 months. I don't think the Indian government has taken too many reform measures in the last 6 months, barring of course some withdrawal of energy subsidies. Other than that, the rest of the measures announced have been more focused on getting foreign direct investment into beleaguered sectors. So I wouldn't necessarily call them reform measures. The populist intentions of the UPA government have brought the Indian economy on its knees. Growth rate has dropped to between 4 and 5%. I am afraid that Indian economic outlook would remain rather bleak in the next 1 to 2 years, thanks to the contemporaneous and lagged effects of the bad policies pursued by this government. And so in that sense, I continue to remain concerned by the Indian growth story.
What is your view on the rupee, the CAD, and economic growth in India? And what projections are you making for the same?
Well, the Indian current account deficit, even if it is improving this year, 2013 calendar year compared to 2012, would be in the vicinity of $80 billion. And let's say that even if the Federal Reserve does not taper, but given that the financial markets are already in rather euphoric territory globally, and European concerns are resurfacing, both politics and economics, and with the Middle East still in turmoil, I think the difficulty for India to attract the necessary capital to finance this $80 billion of current account deficit would remain a very big challenge going forward. So to that extent, the rupee will remain under pressure. Secondly, the Reserve Bank of India is the only one who has the tools and some ability to counter the rupee depreciation, because the government of India has no policy traction or credibility. So to that extent, I think the rupee would also remain captive not only to global sentiments but also to India's bad fundamentals. So I would expect that the rupee will remain vulnerable and be whipsawed by both global and domestic political and economic developments. So the path of least resistance for the rupee still remains one of weakness. But at some point in time, the rupee will overshoot its fundamental value and become attractive. I don't see that coming anytime before mid 2014.